was another up and down week in the corn and bean markets as South American weather concerns and lingering economic questions in Europe remained in view. On Friday morning, we talked with Johannes, a commodity risk manager for ProEdge Marketing at Central Valley Ag, about where markets stand after the first week in February. And I said up and down in the open, but really since Monday it's been fairly positive, and that's due in some part, I would imagine, to South American weather concerns. How much is that playing a role here?
Well, South America's crop definitely has issues, and basically they've been trading South American weather for the last couple of months. One interesting email that I read earlier this week, however, is that in Argentina, they're actually, from September 1st to the end of January, they're actually above average in terms of rainfall now. Now, it all came in the last 2 weeks, but it's interesting to note that the trend is starting to change. Now, the damage is already done, and analysts are cutting Argentina's crop, Brazil's crop, respectively, and that's being factored in right now. But the damage is done. The trend is just changing.
Are there weather concerns in this part of the country? Are farmers concerned about the dryness that we may see going into fall, and does that affect forward contracting?
Yeah, when you look at the drought monitor, you see it creeping down from Minnesota and Iowa into northeastern Nebraska, and then you see the southern plains, obviously still in the middle of a severe drought. And the scare is, are those two going to join? Are they going to come together? And one of the things about Argentina with the rainfall in the last couple of weeks, that suggests that perhaps La Nina is weakening. And if that's the case, Jeff, then all of a sudden, that has a lot more positive outlook for 2012 production here in the Midwest.
Are you strong right now on exports? It seems like there are people on both sides of the fence. They think that we're going to be above or below USDA expectations. Where do you sit on this based off of what we're going to see from China and also South America?
Well, on the corn side, we're pretty much right in line with last year, and there's probably some room for the USDA to increase the exports on the corn side. On the soybean side, we are way behind last year. Export sales on the books for 2011-2012 are over 400 million bushels behind last year. So when you raise a 3 billion bushel crop, 400 million bushels behind last year so far in 2011-2012 is a considerable number. Now, the USDA is predicting a major cut compared to last year, but those are the numbers that they're trying to balance out. So China is stepping up their demand, and that's going to have to take place if we're going to increase soybean exports.
Relatively favorable basis in both corn, especially corn and beans. What are you telling people who are thinking about getting aggressive and selling with it?
Well, one of the advantages of, if you can call it that, of the down that we had after the USDA reports in January is that the end users came up, especially in corn. And so if you're moving grain now for the next maybe 45 days, yeah, take advantage of those cash sales. But if you're looking at selling out to the spring, summer, we think that there's some more improvement in basis just with the shorter crop and still solid demand.
Overall, though, Wade, what's your outlook as we go forward through these next months?
Well, I think we need to be taking advantage of the nearby opportunities. I think we're going to have some opportunities here short term, particularly on old crop. But the thing we need to keep in mind is the new crop production and new crop acres. We got the Ag Forum coming up into February and planting intentions coming in end of March. And if we come in with 94+ million corn acres, that's going to be bearish on new crop corn.
And that's some change from what a lot of analysts had predicted a long time ago, where they thought corn was maybe going to go above even 8. So that's some change we're seeing.
And the tough part is, Jeff, is that the market is different today than it was 6 months ago. And so the market is trading in a different environment, and so the expectations are completely different.